should investors wait until after the election to reallocate their mutual fund portfolios?
No.
What he said.
Can you expand on that?
I mean, ever since in 25 years, people always find reasons as to why now is uncertain. There's always election coming. It was the year Y2K 2000.
Oh, yeah.
We're in a war and so forth and so forth. And it never, I mean, it never pans out at all. You know, you would have wait till Y2K gets settled and then buy. Well, actually, stocks went up like crazy until the Y2K. Then Y2K went really well, and then stocks went down.
Didn't.
So and the market didn't. So it never makes any sense, and it's never. Don't.
One comment, though, we do have a lot of tax law changes happening in 2013. Capital gains rates are going up. So I would say if you have something that is too large a position in your portfolio that you had wanted to lighten up on anyway, why not?
That's fine, but that's not really the election. That's more tax law year change. Okay, I'm with you on that. The election itself,
Yeah.
Well, and the other thing I think people fail to appreciate is just that these things are priced into the market every day. So you go and come up with an estimate of who's going to win today. That probability is priced in, and the markets are very efficient that way. And in fact, you think about healthcare reform and some of the other things that have been out there where you even could say this industry is going to be affected. And even that, it's hard to make money on that. So I think really you don't want to get stuck. It's much better to keep moving and keep applying your plan, keep going. And generally, I think elections in particular, but a lot of these things have hard to predict effect, and it's not really what should drive your decisions. As Christine says, you know your plans.
I'll go further.
You know your goals.
I'll go further than say it would cost you a lot of money in the last 20 years listening to the business press, because the business press tends to be pro-Republican. And in 1992, when Clinton got elected, it said this bad things are going to happen to the market, and the stock market went up a lot. And then under the Bush years, great things are going to happen. And it wasn't, in this case, it's certainly not Bush's fault. He moved right in as the tech stocks were going down. And then Obama came in, and bad things are going to happen to the market, and it's been back up. And I'm just saying I don't think who's the president has anything to do with market behavior. And I think we've got 20 years of evidence showing that. And you're going to get yourself hurt by following, talk show hosts and business press and such they're saying this, because it doesn't play out. And you look at the predictions, and they don't play out. And I've seen people hurt themselves this way. So and so's in office. Oh man, I got to get out of it. Got to get out of these assets. The world's going into. No, it's not going to fall. It's going to move in the same. It's a big world out there, and none of us affect things that much.
Right.
Yeah. I think 08 has everyone looking for the next Lehman Brothers, because with hindsight, you wish you had sold when Lehman Brothers went under. But in fact, usually it's not the first domino of many, and it's not signaling a collapse. And we have a lot of crises that don't go the way Lehman does. And so I think it's better to focus on the fundamentals and your own goals.